Joining me now is CPA and market analyst Dan Geltrude. Dan, good to see you. How are you investing around all of this?
Well, what we have to keep in mind, and it is a difficult thing, is that the markets are trading on headlines. You know, it's not the fundamentals, at least right now in the short term. But at the same time, investors aren't pricing in a sustained disruption to earnings or to growth. So for me right now, defense, energy, commodities, those are the clear winners when you're in a situation of uncertainty, because as long as this conflict continues in Iran, we're going to have a lot of uncertainty. And I'll just add this, I think big tech will hold up because of the AI narrative that is all over the headlines as well, and their cash strength.
Yeah, it's great points. And of course, you make a great point about fundamentals. We're about to see the real fundamentals when earnings reports get released. Tomorrow is the end of the first quarter. We'll start getting first quarter reports in about 2 weeks. And Cheryl, you've also got data out this week on jobs.
Yeah, we've got the jobs report on Friday coming out. We're looking for a gain of 55,000 jobs. We had a 92,000 job loss last month. So certainly that is something that could turn the tide. Maybe that could be good. Maybe that could be bad. We've got retail sales on Wednesday, Dan. And, you know, I think right now there's this Maria mentioned earnings reports. Certainly you're going to see some of the price inflation issues come out in these earnings reports. But then also you've got, you know, the inflation data that we're going to get for the month of March is also going to be something that's going to be possibly a shock to the market. I mean, if the conflict continues, how do you read the data as we move forward?
Well, I think what we're seeing now in the data is we don't know really what's going to happen. Again, war brings so much uncertainty. And as far as, you know, let me say this about the jobs market, because that is so important related to what the Fed may do here. We are certainly not in a collapse. However, we are certainly in a freeze. I think that what we're seeing is a market that is low hire, low fire right now. So they're kind of not doing either. It's kind of a standby. However, as things continue in Iran, I think that we will see these job numbers start to suffer, which of course creates a problem for the Fed, because you have slow growth and we start to see problems with the jobs numbers. So what does the Fed do? Certainly, I don't see a drop in rates anytime soon.
Yeah. But I got to tell you, we're looking at the market since this conflict began. All the major indices are down about 7%. That's not so bad, given what we have been seeing in Iran. The Journal had a piece out yesterday saying, look, the markets can hold up in the middle of this because of all of the money on the sidelines and because of the fundamentals. Of course, oil is the big issue, and oil prices are climbing again this morning. Take a look at Brent and crude oil right now. Brent around $115 a barrel right now, on track for a record monthly surge. New missile strikes from Iran-backed Houthis are raising risks to global energy supplies. Again, crude oil now at 101 and change. Crude is up better than 50% this month as markets price in this escalating geopolitical tension. But Dan, yes, we're going to see all of this show up in the earnings because this all happened in the month of March. And of course, that's going to be the quarterly numbers that we get. But it's all about expectations for the market, right? I mean, if we're expecting this, then I don't know that we see such a huge impact on stocks.
Well, you're exactly right, Maria, because what the market doesn't like is uncertainty, and certainly war brings some certainty of uncertainty. How's that as a riddle? Look, I think that oil is going to stay volatile, certainly while this conflict exists. And I think $80 to $100 a barrel becomes the new normal range. Now, we certainly could go higher, but I think when things calm down, that's the range that we're going to end up in, Maria.
Yeah, now, you got to also look at tax day. Tax refunds could be a near-term boost for consumers. Average refunds are up better than 10% year over year. Totals topping $200 billion so far this season. Refunds are running ahead of prior years, putting more cash into people's pockets. It could provide a temporary stimulus to offer a higher, to offset the higher costs that we're talking about. I've got a Stevens report in front of me. They do the tax refund tracker, and they say that refunds are up 11% year over year in week 8. Even though gas prices are up 27%, by the way, so it's outstripped by the move in gas. But you're talking about, get this, the 2026 tax season. an average return of 3,571 so far. Your thoughts?
Well, that's really good news. So the question becomes, what do people spend that on? Now, it can sustain the economy related to, all right, people have a little bit more money in their pockets, so they're going to be able to offset the pain of inflation. That may not necessarily be the best thing to do with your refund, but it's certainly good news. And we have the one big, beautiful bill to thank for that, because as the president had promised, he was going to put more money in the American people's pocket. And that's exactly what we have. And quite frankly, Maria, it couldn't come at a better time given the circumstances that we're in.
We're going to keep tracking these refunds from the IRS. This is good stuff here. Dan, good to see you. Thank you so much. Dan Geltrude, stay with us. We'll be right back with Congressman